welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, I have Katy Kaminski, Chief Research Strategist at AlphaSimplex, to discuss how Fed Pause-Mania is impacting various asset classes. Katy, it's great to have you with us. Welcome to TradeTalks.
Thanks for having me.
You got it. Let's start with equities first. I feel like the equity market wants something else, and the Fed is telegraphing something different.
Well, I mean, I think what we're seeing right now, what's been interesting to us is just the focus on this pause, the focus on everything's going to be okay, and we're basically at the end of this hiking cycle, I think has caused people to think this is a buy signal. You've really seen that first in big tech, and then you saw a shift even into the Russell, particularly more recently, and I think this basically shows that people are eager, hungry for this pause, but they may not get it, so we'll have to see.
If the equity markets are right and the Fed does in fact pause, what happens in the fixed income space?
Well, I think the challenge here, you're kind of hitting at what we're thinking about a little bit, is that if the Fed does pause, that is good for equities. But on the other hand, if they pause, it means that we're no longer fighting against inflation at the same rate that we were before. Thus, we're tolerating inflation. And so if we tolerate inflation, this means that it could impact long-term cash flows if inflation stays high longer than we'd like. Thus, we might have a Fed on pause for quite a while, and we might also see that fixed income might have to adjust. So you might see a breakout or some sort of impact in the fixed income markets where you see sell-off continue like we saw last year.
Right. And the US dollar, it's fluctuated a lot this year.
Yes, the US dollar has been really tough because if you look at last year, it was a clear winner compared to other currencies. But if you're looking this year, the signals are so mixed because you're seeing usually the US dollar strengthens when the equity markets are down. But now we're seeing that relationship being mixed with what's going on with rate policy, because right now there seems to be divergence across central bank policy, which is causing some mixed signals in the dollar in terms of should the dollar be stronger or not. So we're seeing longs and shorts across the board in different locations, which are not very consistent to this very pro-dollar narrative we saw last year.
And commodities, have they rallied along with other risk assets?
So commodities have actually been the biggest change this month. What we saw was through most of this year, it's been very recessionary in nature, very risk off. But in the last week or so, we've seen a risk on rally move into commodities. So we saw increases, particularly in base metals and agriculture, as well as in the energy sector, which is very much at odds to the theme that they've been trading on most of the year. So is this a sign that yes, the equity is right, equity markets are correct? Possibly. I mean, I'm definitely seeing that's one of the few trends that has reversed this month as opposed to continued.
So when you think about positioning with this backdrop, it feels like that's really been the narrative this year. It could be this, it could be that. Yeah. And we had a breakout, over the past couple of weeks, but it really has felt range bound, and there's one narrative, or it could be this. It feels very divergent sometimes.
Yes, I'll be honest with you, this year feels very much we're waiting on bated breath on every data point. Does this data point tell us who's right? And it feels very much like right now the equity markets are trying to say that they're ahead of the Fed, that we might have a pause and that everything's going to be okay. My view is that it's going back and forth. We're going to have to see how inflation numbers come this summer to see if that's actually the case. So I think I agree with you. Really just very, very divergent views. A lot of wait and see. Well, if we get this data point and if this confirms that. And to be honest, nobody knows the answer. Right. The data's mixed.
Well, I mean, the whole thing is too, if the equity markets run up even more and we do get a pause, does it become a sell the news kind of event because it got ahead of itself? Because the equity market is in fact ahead of what the Fed is telegraphing at this point.
I definitely agree with you in the sense that equity markets are saying we're going to have a pause. So I think what will be interesting is if we don't have a pause, but who knows, maybe that if we don't have a pause, the equity markets will say, oh, but this is the last hike, so everything's good anyway. So that's kind of been the narrative that we've seen. Sometimes you think something's going to be bad news, but it ends up being sort of a sign that you're moving in the right direction anyway. So I think that's what's been very tricky, is that something you think might be a bad situation is often interpreted as, a positive data point. And I think that's where people are challenged in terms of trying to figure out where we're going in the next couple months.
All right. Well, Katy, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.